We are here, folks, yet again. We had two smashers after hours. In terms of stock performance, can you believe it? It's hard to say in this market. Two companies skyrocketing, two big companies skyrocketing after hours. Can you believe it? Google here, obviously, as Eustace Banks once said, Eustace Bag? What's his name? Courage the Cowardly Dog, Eustace Bang. I don't know. Oogity boogity boogity. Googity boogity. That's all I'm saying. Something like that. That's what he says, okay? Stupid dog. But Google here, freaking 9% upward movement in the after hours. Fantastic. Obviously, you see this thing just take off. I mean, it just took off. Where does this put it? If you look in the after hours right now, sitting at over $3,000 again. This stock somehow, in the midst of all of this, still, if it holds, is right near its 52-week high. This has been one that's been very, very resilient this year so far. Only down 5% so far year to date, when a lot of these very quality companies are down 20+%. And you look over the last year, up 43.44% in a really tough year in the market. So Google's been doing fantastic over the last year, and there's a lot of reasons for that. We've seen an incredible growth in ad rates, and you see great recovery here from 2020, and a pretty massive dip back in 2020 because of those ad rates. And we've seen great recovery of the business since then. Google makes a majority of the money, obviously, that they make, mostly off of ad rates. So this, if you're invested in any of the social media stocks that are reporting later this week, you're going to be very happy if Alphabet beats, because of the fact that they make so much money off of ad rates, really just, advertising revenue, because that's how those social media companies make all their money. My presumption is, oh yeah, they're beating on a revenue standpoint, because guess what? Your stock don't go up when you're missing, okay? That's all I'm saying. Let's look at this press release here. GAAP EPS of $30.69. It's always crazy to see because there's so less shares outstanding, so few shares outstanding, I guess, that this looks so high, and obviously that's why the share price is so high. Just crazy to see, but it makes this beat look even more astounding. It's still a really good beat. We're talking about a 10% beat, 3.39 here. $3.39 beat on an EPS standpoint, and this is GAAP EPS, really nice to see. Gonna be a pretty darn nice net income line. From a revenue perspective, $75.32 billion, up 32% year over year, beats by $3.5 billion. That's a monster beat. When you're talking over $1 billion beat, it's a monster beat. No matter the size of the company, you're beaten by over $1 billion. It's a monster beat. I don't know if you, think 7 figures is a lot. Am I okay? I don't know. Do you think 10 figures is a lot? Because I think 10 figures is a lot. Because I think 7 figures is a lot. But 10-figure beat? Are you kidding me? It's quite a bit. Folks. Google services, $69.4 billion. Not a better number for you to have, frankly. Not a better number. They should just really never put up more than that. Cloud, 5.54, and other bets here, nothing crazy there. We are going to look at the press release, get some finer details on the business. That's what we love to do. And we're zooming in because Sundar Pichai, we need to talk about this press release. And what in specific? Ruth Porat, what in specific do we want to talk about? Well, we're going to look at this great stuff. Both quarter end and year end. That's the luxury of the Q4 report. We get the quarter end and year end. Obviously, the show unaudited here. What are you talking about? How dare you be unaudited? Revenue's up massively. Obviously, 32% growth. Last year, they only grew 23%. So to grow 32%, a little bit dyslexic. They flipped the numbers around, but the growth is fantastic. Really good growth. Operating income for the quarter up 29% over last year. Significant. And this is a line I love. Net income line at $20.6 billion compared to $15.2 billion of the year prior. It's darn good. From a year-ending standpoint, you look at the full year, $257 billion of revenue. Really nice to see that. 41% year over year. That compared to last year, 182.5, only up 13% from the year prior. So this year was an absolute just masher of a year, and I think that's why you see the share price has been so resilient to the overall market. Pants pooping, I guess it's a fair way to say it. The market's been kind of loading its britches. That's all I can tell you. It's going to want to change and probably throw out the undergarments. It's best to do that. You don't wash them, you just throw them away, folks. Net income nearly doubled year over year. 76 billion this year compared to 40.29. 40.26. I gotta wet this whistle, folks. We're dying out here. We're still recovering, so it's a little bit dry sometimes. That's what she said. Or he. So really nice to see this massive growth year over year in the net income line, to nearly double your net income and post a nearly $80 billion net income. It's ridiculous. Now, Google is one of those companies that absolutely prints the cashish. Googly boogly prints cashish. Look at the money here. This is something I really like to see. You look quarter end. The ads line here, darn significant, 8.6 over compared to 6.8. You see how ad rates are trending up still to this day. And from a Google search standpoint, obviously the largest segment here, 43.3 compared to 31.9. Really nice there. From the Google network, 9.3 compared to 7.4. Pretty nice. So all advertising here, again, that's the main focus here. 61.3 compared to 46.1. You see massive growth year over year, and it's because of ad rates doing great things. So I have a great bet on Facebook personally, which I believe the stock's trading up after this, which makes sense. Let's just take a look. I mean, it's been unfairly hit anyways. I'm pulling it up, don't you worry. Yeah, up 3.5% after hours, just as a result of this. Really, if you were interested in this thing, you should have gotten in when it was under 300, and you should have bought some short-term call options for this earnings report. I think you're still in a decent bet if you do. Obviously, we're not talking about Facebook here, but I think it's still going to pop on earnings. So, Google Cloud, good growth here, 3.8 over 5.5 this year compared to 3.8 last year. And we saw the total revenues line. Really nice to see that. Employees up significantly too. They're hiring the heck out of people. 20,000 extra people added to the payroll here. Pretty darn significant for a full year's work. I mean, really is. From segment operating results from a Google services, you see a lot of money being made here, okay? 25.9 billion compared to 19. The other segments, some grew, some didn't. Corporate costs grew quite a bit. Other bets grew. Curious why that is. But the Google Cloud, obviously a negative. It's a money loser for them right now, but is in the right direction, I guess you could say there. So it's at around 25% growth there, all things considered. It's good to see that. So it's good to see that. And income from operations obviously really doing good. And this is something really worth mentioning too. Alphabet today announced the board of directors approved it, declared a 20-for-1 stock split. That's right, 20-for-1. I just talked about the shares outstanding. Guess what? There's going to be 20 times as many. Isn't that kind of wild here? The stock split is subject to stockholder approval, which I presume will certainly happen. Again, the main focus of why the companies do this is they want the stock to be a little more affordable to, let's say, the retail investor, to get people more enticed. Not everyone can get into a stock that is $3,000. I mean, not everyone's got $3,000 to spend, and maybe their brokerage does not offer fractional shares. So, as a result, they're doing this. Really nice to see. Great stuff from Google. Worth mentioning. Normally, they don't usually have a lot worth mentioning on those news things because they don't announce anything too crazy. But here we go. Let's look at the balance sheet. Total current assets 174.2 compared to oh no, you fooled me. It's on the right. 188.1 compared to 174.2. So there is growth there. You see a growth in the marketable securities line, decrease in the cash and cash equivalents, and a growth here in the accounts receivable. Really nice to see. Total assets did grow significantly, 359.2 compared to 319.6. Really, really nice growth there. Big growth here in the property and equipment line is worth mentioning. Total current liabilities grew as well, 64.2 compared to 56.8. So there's quite a big growth there. Nothing super, super crazy. Total liabilities in general, they grew, but not nearly as much as they grew assets by 107.6 compared to 97. Grew by 10 billion. Total assets, that's right, grew by I blanked there. $40 billion is what I meant to say. I was going to say 40, and then I was like, that's not 40, but it is 40. So shareholder equity in a really nice spot, 251 compared to 222 of just a year ago. Sorry. I apologize. I'm going to die. So we'll kind of end it at that. I hope you had a great time. Just kidding. We're talking about the stock valuation, baby. Great balance sheet on this one. I love it. Great balance sheet. It's a premier balance sheet. You'll love Google. If you want to look at a class balance sheet, state-of-the-art balance sheet, you look at Google. But let's see. Stock's valued. It's going to be darn near $2 trillion at the end of this. Sorry, it's a little rough for me. Darn near $2 trillion. But the P ratio is still dirt cheap, and especially after a beat like this, and the forward P ratio is still going to be under 30. It's a dirt cheap stock. I hate to say it, with a market cap of around $2 trillion. I think the stock's still cheap, folks. I think it still is, even near its 52-week high. This is a company over the next 5 to 10 years will become even more dominant. YouTube TV is going to continue to grow. Ads still going to be doing great, great things. I love Google stock. I hope you love this one too.